You've worked hard to build a dream retirement. Now it's time to put that plan into action. This is Retire ATL with Aaron Vincent and Matt Decker. The team at Vincent Financial wants to help you build, protect, and grow income to get you to and through retirement. Now, Retire ATL with Aaron Vincent and Matt Decker.
This is the Retire ATL podcast, all powered by the Vincent Financial Group. You can get more when you visit retireatlradio.com. Thanks for subscribing. Thanks for downloading. Now, let's get to the show.
My name is Mark Owens and Matthew Decker here this weekend. So, quick question for you.
Riding solo today.
How you feeling?
I'm feeling great.
You feeling strong?
Oh, yeah.
You ready to go? He brought notes, Brandon. He is ready to go.
Sometimes I come with notes.
Sometimes they're doodles.
When Aaron's out of town,
Yeah.
I come with notes.
Yeah?
Because that means we can talk about whatever we want to talk about because he's not here to keep us on the rails.
So now that we're in November, he has a great Thanksgiving recipe, and we're going to break it down piece by piece, ingredient. We got a call, it was a couple of weeks ago. Gentleman listened to the show, and he simply had a great question. He was just like, Aaron, Matt, I want to talk about debt. How much debt should I take into retirement? And furthermore, is there such thing as good debt? I thought I'd bring that to the table this weekend.
Yeah. I love sitting down and talking about debt with people because it can be a big needle mover towards retirement planning.
Mm-hmm.
So let me give you a couple examples. Number one, most people, when they think about retirement, I don't want to say most people, but a lot of people, they come into the office and they give us an income number that they think that they need.
Mm-hmm.
And our job as certified financial planners and just people who care about other people, we're like, hey, so tell me why you need that income number. Like, what is it? You know, okay, you need $10,000 a month. Tell me why. What are you going to do with that? And so we have that conversation. And, well, I got, I like to go out to eat, like to take my spouse on dates, and we got maybe some grandkids we want to do some stuff for, and this, that, and the other. But when we ask that question, a lot of times they're looking at what they're spending right now. And right now, maybe they have a car payment. Mm-hmm. Maybe they have a mortgage payment or, all the things. They're also doing savings. A lot of people come in and they think, well, I need $10,000 a month because I'm saving, $1,000 a month into my brokerage account. And they're putting all that in. So by the time we get done with, really, that's our first meeting. It's just, who are you? What are you trying to do? Tell me why. Give me the why behind the numbers and the things that you're looking for, your goals. Give me the why.
Yeah.
And when we get there, we often find that most people need way less than they think. You might be, 15 years into your mortgage, which means if you're on a 30-year mortgage, you only got 15 left.
Mm-hmm.
And we're not planning for a 15-year retirement, right? We're planning for a 20, 30, for some people a 40-year retirement if they're retiring early. And so that's such a huge needle mover, just knowing what debt is going to be there, what debt is eventually going to fall off, and reframing that conversation. And so I think your initial question was, how much debt should you have? That's a tough question to answer. Some people have a ton of debt, but it's working for them. They might have 10, 15, 20 rental properties that are mortgaged, but they're cash flowing. So like that kind of debt can be a beautiful thing if it's done well and if it's properly leveraged and you're not overcommitted there. But if we're talking about credit card debt, or if we're talking about debt that is really working against you, where there's no appreciation on the other side of the balance sheet, so like a mortgage, hopefully your home value is appreciating, so the mortgage doesn't hurt you as much. Credit card debt, man, that is just a hard number working against you every single month. And in fact, here's a funny story. We had someone come to the office a couple weeks ago, and they didn't know what to do with their debt. And they had not a ton, maybe $15,000, $20,000 of credit card debt, but they had like $1 million in their 401k. And they were old enough to be able to access that. They could do an in-service withdrawal. That's what that called it, in-service withdrawal. They could take it out, not pay any penalties on it. And they're like, I don't know what to do about this debt. And I looked at their 401k, and they had like $200,000 in cash in their 401k. And they've got $20,000 of credit card debt working against them at 17%.
Yeah.
And I'm like, hey, you want a guaranteed 17% rate of return on that cash in your 401k? Because I can get that for you, guaranteed, by just eliminating this credit card debt over here. And they're like, oh, but can I do that? because that's my retirement funds. And I'm like, listen, not only can you do it, we would be terrible financial planners if we did not make the strongest case possible for you to absolutely do that the moment that you walked out of this office.
Right.
So there's good debt and there's bad debt. What kind is it? Sit down with someone who you trust, that you want to have that conversation with, and we'd love for that to be us.
Yeah.
RetireATLradio.com. You can book an appointment right there on the homepage.
Yeah, when you go to RetireATLradio.com, you'll see it right there, right in your face. It'll just say, book now. And if you want to sit down with the team, ask any question. Gentleman was asking about debt right there. I will say, talking about credit cards. So we've talked about it before. I've had some pretty big, substantial oral surgery. I got fake teeth. I'm working on the bridge. Shout out, Dr. King.
It's coming along nicely, by the way.
Thank you.
Yeah.
So I'll pull back the curtain. I showed Matt, I had this bridge taken out to get it checked on, Brandon, to see make sure all the posts and everything are coming together. And I have a picture of me with no teeth. When I say, it's not like, my front teeth.
That's
or
like no
my
teeth.
cane. I mean, not one tooth.
No teeth.
None in the very top, because I'm going through this crazy amount of dental work right now. But when we were going to get all this taken care of course, insurance doesn't cover it because it's cosmetic. Oh, let me phrase it. They covered about 1.5%.
Hey, thanks.
Hey, thanks, guys.
Appreciate that.
That covered the gas to get down there.
You got like 3% cash back on your credit card, so really it's like 4% off.
So we had to get a loan. We found one company, a credit card company, that was going to offer a medical loan. You know what the interest rate was?
Do I want to know?
Yes, you do.
I'm going to say, if I'm guessing, I'm going to say 24%.
29.99%.
Woo! Holy cow. Oh, my gosh.
Mm-hmm. And it was buried. Like, you know how the fine print, you'll just scroll.
Wow.
Well, I actually read it to find out because I could never find it. I was like, well, what's the interest? And you had to get to the very bottom. And it was like 29.
Was it like 0% APR for some certain amount of time and then it kicks on?
6 months.
Wow.
And then 29%.
Mark, you better pay that off in 6 months. As a certified financial planner in the room, it's my job to tell you that you need to pay that off as soon as possible.
Oh, no, I didn't get it. I saw that one.
Okay.
No, I did not. I saw that immediately and just X'd out of the tab.
So you're learning something on the show here.
Yes.
Okay.
Yes. Listen, I will teach you nothing on this show, but I will teach you one thing. 29.99%.
Just can't do it.
Interest rate.
Wouldn't be prudent.
Is not a good thing.
Nope.
You mentioned earlier, people come to you with an income number in their brain. They say, I want to retire with this much a month. Do you think that's because so many of these financial talking heads say you need at least $1.5 million before you can even think about retirement? Or if you don't have $5 million in assets, retirement's out of the question. Do you think that's why people come to you and say, I need or I want this much a month?
I think it's just difficult to do until you get there, right? A lot of people, man, when the paycheck stops, that's a whole new world.
Yeah.
I mean, your paycheck stops coming in, and now you got to take all the things that you've saved, or maybe you're lucky enough to have a pension. You got to take what you've saved, and you got to turn that into your new paycheck. And when you're staring down the barrel of inflation, when you're staring down the barrel of market volatility, and maybe you've got kids that you want to help through school and grandkids and all the things, I think a lot of people just come in and they're like, let me just choose a number that I feel like is workable.
Yeah.
But I'm not quite sure how I got there. I just know that feels workable to me. And I totally get that. And at the same time, it really does pay to sit down and look at that number with a magnifying glass and figure out what is the actual number. Because you may be surprised. You might be closer than you think.
Yeah.
You might be closer than you think when you factor in things like Social Security, which I know a lot of people, don't want to rely on solely for obvious reasons. But when you factor in things like Social Security, when you factor in, maybe you've done a pretty good job saving for retirement, you're probably going to be in a better position than you might think. And so I just encourage you, give us a call, sit down with someone you trust, retireatlradio.com, start that conversation. It'll benefit you greatly.
All right, well, let's talk about that for a second. Let's talk about who needs the Vincent Financial Group the most right now. Who needs to sit down with you, Matthew Decker? Who needs to sit down with Aaron Vincent, the team at Vincent Financial? By the way, home office in Woodstock. This isn't a syndicated show that runs up and down the East Coast, all across the Midwest, up towards Tennessee, South Carolina. Yet. But for right here and now.
Right here
in Atlanta. Proud to be here in Atlanta. But
Act fast.
before we get too big for our britches,
That's right.
RetireATLradio.com to meet the team, schedule that consultation. Who are we talking to?
It's a great question. I love it. And I got a couple stories, I guess, that I'd tell you And maybe it'll resonate with someone and maybe it won't. So this is going back maybe a month or two now, but we had someone come into the office and they were looking for a second opinion.
Mm-hmm.
And the long story short is this. They were heavily involved in storage units. They owned a bunch of storage units and had built them up over the years and sold them to private equity. Mm-hmm. And they walked away from that transaction with like $13 million. And these are people that, in their own words, not financially savvy, just kind of head down, got into a great space that exploded in growth. If you know anything about like storage units or, same thing happened with trailer parks, like super profitable. Private equity is buying those like left and right. You almost can't even find them anymore.
Mark Owen's question here.
Yeah.
When you say private equity, what do you mean?
I mean big money. Okay. Big money, like companies where all they do is buy other companies and then slash expenses, increase, rent, and then turn it around.
So
and repackage
you own
it.
like Decker Self-Storage, and then U-Haul or Public Storage comes in and buys you out.
Exactly.
That's what you mean.
Or just like, XYZ LLC Investment Co. comes in and buys you out.
Okay.
And it's just a holding company that owns a bunch of storage units. So this is all over the place. Chances are, if you're looking at a storage facility, not many of them are privately owned anymore,
right?
Because they've been sold to private equity, big groups of investors. So anyway, that's what they did. Not super financially savvy, just head down, working hard, kind of building their little storage unit empire. They walked away with $13 million, way more than they ever would have needed to support their lifestyle. And so they got this $13 million, and they start interviewing financial advisors. And they're telling me this story because this happened like 5 years ago. They're coming into the office. They're telling me this whole story. So 5 years ago, we went around, we interviewed all these financial advisors, and we felt like because we had all this money, the people that we were talking to, they didn't want to just give us the plain vanilla, like boring, easy alternative. They didn't want to give us the easy answer, the thing that they do for everyone else, because we had more money than most people had who were going into that office. And the long story short is they got sold an idea to put all their money in this kind of like irrevocable trust to avoid some taxes. And then they put that money into alternative investments. So like not stocks, not publicly traded companies that are, liquid that you can get in and out of. No, more of like an illiquid, not easy to sell, not really well defined what the investment is. They put all this money into this trust that they didn't have much access to for the tax benefits. These investments that were alternative investments that were supposed to give them some crazy high rate of return that you can't invest in unless you're an accredited investor. Right. So you can't even get in there unless you got a bunch of money. And 5 years later, they're coming into our office and they're like, the reason we're here is because our $13 million is now $3 million. And it's only been 5 years. And now we're like, oh man, do we actually still have enough? Like we had way more than we needed. And now we feel like we may not have enough.
Right.
And it's only been 5 years. Can you help us unwind to this? And the sad ending to that conversation is there's not much we can do to help at that point. And so why do I tell that story? I tell that story because if you're somebody who's done a great job saving for retirement, maybe you've built an empire, you've sold it, you've got a big windfall of money coming your way, there's all kinds of people. They're going to try to get you to look at the sexy thing that you're the only one that can do this because you're one of those people that has money. The normal people out there, they can't even access this special thing. Right. And then they hand you a prospectus that's as big as a phone book. And they're like, here, a prospectus basically outlines all the contractual terms of the investment. So they hand you a phone book of disclosures. And they're like, but hey, we've averaged, whatever the number is, I'm going to make it up. We've averaged 18% for the last however many years with basically no risk. We've never missed a payment, right? This is how oftentimes some of these alternative investments are pitched.
And like a timeshare.
And I'm here to tell you that if you're in that situation, you need to reach out to us because that mentality is the mentality that gets you hurt more often than not. You've done such a good job that you actually have the luxury of being boring. Like you get to benefit from just being boring. You've already done enough. You're going to be able to live the lifestyle that you want to live. You're going to be able to be charitably inclined to the things that are heavy on your heart, to the causes that matter to you, you're going to be able to set your kids up for success, your grandkids up for success. You're already going to be able to do all the things. And chasing after the thing that only you can do because you got a bunch of money. I'm just here to tell you, we see it every single month.
Yeah.
We hear the story of someone who had enough, and then they got into something that maybe they shouldn't have, and now they don't. And I would just implore you to see boring as a blessing. Being boring is a blessing.
It's okay to be boring.
It's okay to be boring. On the flip side, there's people, so who are we talking to? I would say if you have more than enough and you're being pitched the super sexy stuff, please come see us. Boring is a blessing. RetireATLRadio.com. On the flip side, if you feel like I'm close, like I feel like I got to be close, but I also kind of feel like maybe I'm behind. There's that like tension of like, I know I'm close, but I still feel like I have more work to do.
Yeah.
That's our ideal person, because that's someone who's going to take action. They're looking for someone to trust in that scenario. They're like, I feel like I maybe have enough. I also feel behind, and I need someone that I trust who can guide me through this process and give me clarity.
Mm-hmm.
Those are far and away the most fun relationships that we have, because everybody gets to win, right? You're looking for clarity. You're looking for someone you can trust. And we're looking for people who are looking for someone they can trust and who want clarity,
Sure.
right? We don't want to convince you to do anything you don't want to do. And if you're one of those people who's like, I think I can retire, but I'm not sure, when we get the opportunity to say, you can definitely pull the trigger, that's like one of the best days that we get to experience in the office. And so, man, we want as many of you as possible. Like, that's so much fun for us to be able to say, hey, you can do this. You're there. You can get there from here. And when you're coming in feeling like maybe you're off track,
Mm-hmm.
and then you get that news of like, no, you can actually make this work, that's a fun day. So it's not a number. It's not an age. It's more of a mindset.
Yeah.
And
How often do you get to say that, though? Somebody comes in, retireatlradio.com. They schedule that initial consultation. They come in, and you mentioned earlier to the people that are, a little financially savvy. But what about us? And I put me in this category of I'm not financially savvy at all. I've made some financial mistakes in my past. I may be a little embarrassed of my portfolio. I should have done this. I should have taken advantage of this. I come to you a little nervous, a little anxious. What do you tell those people?
oh man, you're here for a reason.
Mm-hmm.
Everybody has baggage. Everybody makes mistakes. No one comes in with like the perfect portfolio, the perfect track record, having all the answers. Every single person comes in not having all the answers. Otherwise, you wouldn't be in our office, right? If you already had all the answers, if you had made no mistakes, you wouldn't be in our office.
Yeah.
So everybody comes in with baggage, and that's just expected. So, man, I would just encourage you to not let that be the thing that keeps you from engaging a financial professional. I'd love for it to be us,
Sure.
but it doesn't have to be us.
Yeah.
Don't let that be the thing that keeps you from seeking after some professional advice.
I love that you said it's okay to be boring. It's okay to not be financially savvy. RetireATLRadio.com to schedule that initial consultation and let it be known, and I'm going to let you handle this one because you've said it before that you're not miracle workers.
Right.
And explain that.
Well, when we say that, what we mean is, and this happens less and less, as more people listen to the show and kind of get to know us and feel us out, all that is to say is if you are trying to retire next year and you haven't started saving yet, there's not much we can do there.
Right.
There's not much anybody can do except you just continuing to work and save. And how long is that going to take? I don't know. It depends on what kind of life you want to live. But if you're somebody who has lived below your means and you've made retirement a priority, we want to help you. If you've lived below your means and you've made retirement a priority and you're looking for someone to trust who can guide you through this process, you're exactly the person that we're talking to. You're exactly the person that we want to meet and help. You can find us retireatlradio.com.
Home office in Woodstock, but the multiple opportunities to meet you at a time and a place that fits your schedule across Metro Atlanta. So let's talk about the market here for a second because we've seen some market highs, but some people fear the inevitable plunge. I want you to hear this clip from wealth advisor Eddie Gabor. He says that the bull market, well, unfortunately, it's not ready to stop yet.
I think we'll still see some chop as we go into the month of November, but the setup is really strong going into the fourth quarter. And I think investors need to not worry about any short-term volatility and focus on where we'll be year-end as well as going into next year. We continue to say we see 15 to 20% more upside in the S&P as we look out to 2026. People are underestimating the growth trajectory we're going to see, so we continue to be very bullish.
Is that Eddie Gabor or Theo Vaughn?
I don't know. It sounds like a New York stockbroker.
Tell me that's
I
not.
think we'll still see some chop as we
Tell me that's not Theo Vaughn right there. But let's talk
Does
about
our audience know who Theo Vaughn is?
Yes.
Okay.
I think he was on Game Day a couple of weeks ago.
Oh, was he? Okay.
Yeah, I
cool.
think he's become a pop culture name in the. If you don't know who he is,
He cracks me
I
up.
think we'll still see
that's what he sounds like right there. He's a comedian. So let's talk about that for a second. How do you help the families you serve participate in a bull market's upside while still preserving their savings from the next correction?
Yeah, well, first, that's really hard to listen to because, man, if you're someone who gets your financial advice from a show like this or another news show, you're missing out because we can only do so much.
Mm-hmm.
We can only do so much without asking you questions. So he's saying stuff, which I don't know. I mean, do I agree or do I not? It doesn't really matter. What I do know is the only way that you will actually be able to participate in the market upside, the only way over the long run is if you feel safe.
Yeah.
That's the only way. If you don't feel safe, I think in the setup to that audio, you mentioned like some investors are fearing a plunge and this guy's saying, no, hold on. Like it's 15% more is what we got. Let's ride it out.
Sure.
Okay, fine, maybe. But if you don't feel safe, then you have virtually no chance to actually experience the run. Because as soon as you start to see volatility, as soon as, Aaron always says, everybody has a plan until they get punched in the face. That's
Yep.
Mike Tyson. As soon as you start to get punched in the face, if you're already like, I don't want to be in this fight, well, the fight's over, right? And you're not going to sit in it and experience the wins. So the only way, let's say that there is more bull market to go. I hope so. The only way you're going to be able to experience that is if you are rock solid in your investment plan. If you know I've got this many dollars that are participating in my growth and my upside, and I've got money over here that's protection focused. If you have both piles of dollars, you have growth dollars and you have protection dollars, and it's in the right ratio. What's the right ratio? That's why you can't just get advice from a show like this. You got to come and you got to talk to us. I can't tell you what it is.
Right.
You got to figure it out for yourself. We can help you do that. But until you have the right money in the right buckets, in the right allocation, the right amount, you're not going to be able to sit through the volatility that brings you the 15 or the 20% return because it's never just straight up. It's not that easy, right? You always have to ride out some storms in order to see the benefit. And sure, when you look at the chart going backwards, you're like, oh, that was a surefire bet. Like, of course, anybody with a brain would have just invested here and then sold there, like because the chart looks so easy. But it's never that easy when it plays out hour by hour, day by day, and we have a 24-hour news cycle where everyone's job is just to talk about what's happening right now. It doesn't work. So the only way you can actually get the returns is if you have a durable portfolio, you have the right amount of money in protection-focused assets, safe assets. Could be cash, right? I don't care what it is, but you need the right amount of dollars over there, and you need the right amount of dollars in your growth bucket so that you can just kind of close your eyes, ride out the storms, and get the big, sexy returns.
Insurance products are offered through the Insurance Business Advanced Planning Group. Vincent Financial Group is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Advanced Planning Group are not subject to investment advisor requirements. Advanced Planning Group and IPW are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be constructed as advice designed to meet the particular needs of an individual situation. Vincent Financial Group is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained by sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Vincent Financial Group. This podcast is a paid placement.